Inflation surged for the ninth straight month at 6.7%, with Filipinos further adjusting their spending patterns. What's next as we enter the fourth quarter? With us today, Budget Secretary Benjamin Diokno to share about what we can expect in the months ahead. Good afternoon, sir.
Hi, good afternoon.
So, Secretary, global lenders have downgraded their growth forecasts on the local economy for this year and the next. And you also said that the government is likely to miss its GDP target of 7 to 8%. Is government revising its growth estimates?
We have scheduled a meeting by the Development Budget Coordination Committee on October 16 after our trip to Bali, Indonesia for the IMF World Bank meeting. And so we will revisit all our forecasts, okay? And I was quoted as saying that the 7%, which is the lower end of our 7 to 8 forecast, is not likely to be met because of the elevated inflation. As you know, the higher the inflation rate, the higher the deflator, and therefore it will be more difficult. Plus our agriculture sector really is sluggish, right?
Would you expect it to be more in line with the 6.4 to 6.5% that the global lenders are?
More or less. Along that line. Okay.
Speaking of the agriculture sector, you had mentioned that the agriculture sector is sort of one of the drags on the growth. Would you recommend a budget increase for either the agriculture department or the agrarian reform department?
That's a misnomer that as you increase the budget of one sector, that will move the sector to move. I remember during the time of President Estrada, agriculture grew by 6.5%. So it's really more the policy. And maybe we, at that time, if I remember right, we encouraged the competition among local governments to produce. Because as you know, agriculture is a devolved function. So the governors, the mayors, the barangays, they should be more involved in this sector. Right?
And you mentioned that because during the time of President Estrada, you were saying that then the budget was even lower or quite similar to what we have now?
Yes, similar, but more focused. And in fact, I think we know exactly what to do. For example, I asked the Secretary of Agriculture at that time, William Dar. I met him recently, and I said, if I give you 10 billion, what will you do with your money? And he said, I'll invest in what is called small water impounding facility, not the big dams. You know, because that's more immediate, and because we have a lot of rain, so we have to keep the rainwater, and then we can use that to irrigate our land. And we have to invest in fertilizer also. We have to invest in high variety seeds, etc. And I think that's the way to do it.
So for you, it's less about the budget, more about the policy. And I guess you're having these conversations with Secretary Piñol.
Of course. We do talk a lot. Yeah.
Well, inflation has been a major concern, as you've now heard a number of times. I guess from consumers' perspective, has inflation peaked? And how can we assure consumers that really prices are under control?
Recently, before September 16, we met as Secretary Dominguez, Secretary Pernia, myself, and Secretary Piñol, and we look at what's happening in the agriculture sector. The peak in the inflation there was a major contributor, which was a mistake by NFA.
Okay.
They have 4.6 million sacks of rice, and they did not release it, okay, into the market. We gave them 5 to 6 billion pesos, and they did not buy rice, palay rather. They prepaid their loans. So those are mistakes, and so that added to the elevated price inflation. Of course, the other factor which we do not have any control is the world price of oil, right? So we look at those, and then we look at the agricultural sector, and so on September 16, the President signed on our recommendation an administrative order freeing up most the importation. So most of the restrictions on importation have been removed. So I think moving ahead, that will be a big factor in controlling or limiting the price, the high prices of products.
You remain fairly confident then that the inflation has in fact peaked at this point.
Yeah, that's our position, that it has peaked this quarter, meaning, or rather the third quarter, I look at the numbers, and it has averaged 6.3%, and we expect the inflation rate on the fourth quarter to be much less than 6.3. And there's unanimity among the World Bank, IMF, ADB that inflation will be down to the normal level by next year.
By next year.
Right.
Well, speaking of that, no, one as you mentioned, one of the main concerns is that one of part you do not control is the fuel. Now that the cost of the price per barrel has in fact touched above $80 at this point, should the government consider suspending the train loss implementation of the excise taxes on fuel? In part, I know that my understanding is that in 2019 and 2020 there are additional parts to that. So should we be suspending the excise tax given the current conditions?
But there's a provision in the law that for 3 consecutive months, if the price of crude oil in the world market, and this is not the Brent variety, this is the Dubai Oman, right? Then we suspend the tariff on oil, the increased tariff on oil. But let's wait for the law. It's not. There are 2 incidents where it was above 80, so let's wait for it. It's not even Dubai Oman, right? So,
that's true.
And I said, I was interviewed abroad, and I said, look, this is a structural reform. We really need we are doing the tax reform so that we can change the structure of our fiscal position. We've been skimping too much. We're not investing a lot, and that's why we have this congestion all over. So this is a structural reform. Let it go. And we view inflation as transitory. It will fade over time. And I said, changing recalling the tariff at this time is like using a sledgehammer to kill a fly. Okay?
Good analogy. Are we at risk of an overheating economy? Basically, can the Philippines maintain its current growth while keeping inflation at manageable levels?
We're about just at our capacity right now, but precisely we're investing a lot, investing in physical infrastructure, so we're increasing the capacity of the economy, and we are investing in our manpower. So I think we are not going to face any overheating at all.
What gives you this much confidence that in our economy?
Well, I'm looking at the numbers, and I've been in government for at least 30 years, and this is all the stars are aligned. We have a solid banking sector. We have a very competent Banco Central. Our fiscal strategy is okay. Our debt to GDP ratio is at the lowest, around 40%, and it will continue to decline.
I think you had mentioned in our off-cam conversations about foreign direct investments as well.
Foreign direct investment peaked last year at 10 billion. That's twice the average of the previous administration. And this year already, year to date, it's already up by 42%.
That's all good to hear. I guess from a consumer's perspective, what can government do to boost consumer confidence and improve investor sentiment? If we look at the conversations out on the ground in the stock market and things like that, really, I think at this point, people want to get more confident about the economy.
The result of the first package of the tax reform, we benefited 99% of income tax filers by cutting their tax rates. So right now, they are benefiting by receiving at least the equivalent of another month's pay by cutting from 32 to. They are not complaining. They're just quiet. Okay. In addition, we are giving an unrestricted subsidy to the lower half of the population because we have anticipated. This is a good law. The one that was designed by this government is a good law. We anticipated that it might hurt those who do not pay the income tax. Okay. And so the lower half, about 10 million families, are receiving 2,400 per year this year and 3,600 next year and 2020, because we anticipate that things will be a little bit hard, but it will, as we invest in infrastructure and education, things will
All right.
Be better.
Well, Secretary Diokno, again, always we wish there was more time. Thank you again for your insights.
You're welcome.